Okay, excellent. Solomon is here.
Morning,
Yeah.
Solomon.
Good morning.
Hi, Solomon. Good morning. Hi,
Morning.
Johan. Good morning. How you guys doing today?
Good, thank you.
We're good. Sorry about the technical hitch. I'll have to talk to IT after this, but thanks.
Okay, excellent. Can everybody hear me clearly?
Yes.
So let's do mic checks to be sure that everybody is clear. If you can hear me, please just confirm that it's very loud and clear.
I can hear you loud and clear.
Okay, excellent. Thank you so much for taking the time to join this conversation. It's gonna be exciting. We have quite a number of people joining us on LinkedIn and within our team as well. So thank you for taking the time. Today's conversation is gonna be very brief, but very much detailed as well. Across the continent, what we are seeing is a huge supply gap in student housing. For me, student housing is one of, I think, the most compelling investment opportunities across the continent. But there seems to be a mismatch in that space. There's a lot of opportunities, but capital, especially in emerging markets across the continent, private capital is not as involved in purpose-built student accommodation as we would expect, just seeing from the opportunity. So today's conversation is going to hover around your perspective as solid operators in your specific market and your perspective of the market and what you think can help attract capital. So I'll just do a quick intro and we can dive into the conversation. I hope that is fine. So for those of us joining us from LinkedIn, I would say two of the biggest purpose-built student accommodation providers in the continent. We have Johan joining us from South Africa. Johan is managing the REIT portfolio for Eris Property Group. The purpose-built student accommodation portfolio for Eris Property Group. And then we have Solomon joining us from Acorn Holding in Nairobi. They've done amazing work in this market, and they're going to be sharing their perspective on the market in general. So just to even start the conversation, I'll just give a bit of context. I think anybody who is active in the African market, whether you are within the purpose-built accommodation segment or outside of the segment, you can actually see what the opportunities look like. I'll speak very briefly on Nigeria now. Obviously, pass the mic to our speakers. So Nigeria currently accommodates less than 9% of its student population. What that means is tertiary institutions across the country do not have the facility to accommodate more than 10% of the students that they admit into these institutions annually. And so what you find is a lot of informal student housing around off campuses, and the impact of it obviously are like the issues we see in terms of like security threats to students, excessive pricing across this market. Although a lot of private investment has been coming in and there are private sector-led operators coming into this market to build and operate purpose-built student accommodation, we are not the stock and the supply in the market still does not meet that gap. And I know it's the same for Ghana, it's the same for Nairobi, and then I can't say as much for South Africa because it's a much mature market. So I'll just start with you, Johan, to just share a bit of context on what the market looks like in South Africa, and just also a bit of some of the stuff your team are doing in this space. Johan, you can.
Great, thanks, Martin. Really appreciate that. So we're Eris Property Group, a multi-property Property Services Group. We do everything from developments to property management, facility management, asset management, investment and fund management, corporate real estate services. We've got 4 offices across South Africa, and then offices in Ghana, Malawi, Botswana, Mauritius as well. We've done across all the different asset classes over 160 developments. We currently have 40 billion rand under management. And in the student accommodation, which is probably our youngest asset class that we've been involved in, we've raised capital in an investment vehicle called South African Student Accommodation Impact Investments. We've developed over 6,000 beds. We've got 3,000 under construction. We've got further pipeline that we're working up, and we're also trying to expand that investment vehicle. We're also very proud to have developed the largest student accommodation single-phase development in South Africa, with not in South Africa, in Africa, with 3,081 beds, including a 7,000 square meter shopping center on which it is built. You'll often see the brand Rise Student Living, which is the brand through which we do the property management of student accommodation. So that's a little bit about us. To set the scene in South Africa, where we've got most of our student accommodation experience, although we would like to develop further afield in Africa. The market has been ripening very quickly here, and we've seen it following similar trends to those as the US and European markets. Those markets have some listed entities of over 100,000 beds. And in South Africa, there's a few bigger players that are looking at REITs or unlisted REIT structures to be considered for student accommodation specific asset classes. We currently don't have any listed student accommodation vehicles yet, although there are a few players in the market that have grown quite substantially over the last few years. To understand the uniqueness in the South African market, you need to understand our National Student Financial Aid Scheme, which is a big contributor. And there's some positives and negatives around that could also be used going forward in the discussion in other scenes. So maybe just, if it's okay, let me just explain quickly how that functions. So the National Student Financial Aid Scheme is, according to one of the members of Parliament, the biggest student financial grant scheme in the world. Still have to do a bit of fact checking about that, but it does support close to 1 million students. It is, however, a bit of a drag on our fiscus currently, but possibly the single biggest influence that could move the needle in South Africa in education, unemployment, and the economy. If only it was managed better, I think it would have a much better successful outcome. Another puzzle piece is that South African student accommodation, where you need accreditation from NASFAS, needs to be built according to what they call the minimum norms and standards gazetted by government. So this basically prescribes how big rooms have to be, what the ratios of toilets, showers, ovens, heaters, stoves, fridges, all of those things should be within a student accommodation development. So together, NASFAS, the National Student Financial Aid Scheme, and the Department of Higher Education and Training, who prescribes the minimum norms and standards, also set the accommodation rate each year that can be charged if you are targeting NASFAS students. Obviously, there's different markets in South Africa. You've got a bit of a higher-end market, you've got a NASFAS market, and then a missing middle and a lower-end market as well. NASFAS contributes to a student accommodation allowance where minimum norms and standards are complied with and that they have accredited. Subsequently, in the past, it was good. The the development and investment capital flowed because of this sort of government-backed rental that was provided. But since 2023, rentals have been slashed, payments have not been as regular as most investors would like it, and it has become a little bit of a risk in South Africa. And this has actually forced existing players and developments to become more creative, innovative, just to keep their heads above water. In addition, South Africa, something that could be maybe transferred is the NASFAS grant function, but it should possibly be a loan structure rather than a grant. We're lucky with our interest rates, well managed, reasonably low, and gives a good idea and not a lot of volatility around that for investors. Our land ownership is clear cut, and you have a strong legal standing as a landowner. We've got reasonably deep capital markets. Some of the things that are maybe more transferable into other African markets as well is accreditation or leaseback demand certainty for investors, large-scale developments and portfolios, and the minimum norms and standards could also possibly be expanded on in other countries, but I would warn against it so that it's used more like guidelines and not rigidly followed as in South Africa, because it prohibits innovation. There's a lot of solutions that could be done better in other ways. And I think the innovation is probably the most important factor that we're going to have to talk about today if you want to do student accommodation across Africa.
Yeah, thank you so much, Johan. A lot of the stuff you're already unpacking are things that we'll discuss further. So thank you. That's a very good and a very good overview of the market, and a lot of it we will unpack later, especially the National Student Financing Aid that you spoke about. But Solomon, I just want to hear your thoughts around. Just give us some context on the Nairobi market. The Kenyan market, and I know the work you guys are doing and how you are leveraging structures like real estate investment trust to fund student accommodation. Just give us a very sharp overview on the market, focusing on the opportunity.
All right, thanks, Martin.
Thank you again for joining.
Yeah. So maybe just to give a bit of introduction, my name is Solomon Maunga. I'm the manager for the Acorn Student Accommodation Development REIT. It's quite a mouthful, so we just call it the ASAD REIT. And the thing about Acorn is Acorn actually has evolved from being a project manager. We've been in the industry in Kenya for about slightly over 25 years. And it's only in 2015 that we shifted strategy to now kind of focus on student housing as a segment within our broader strategy of developing dignified housing for young people. I think that's the key driving force for our business. We started with student housing, that is in the purpose-built student accommodation space. And initially, there were a lot of learnings because predominantly in Kenya, tertiary institutions do not focus on accommodation as their core business, because their core business essentially is providing the education. So in the olden days, after independence, university enrollment was very limited, and they used to enroll based on bed capacity. But there was a change in policy in 2003, which allowed universities to get charters without necessarily having the capacity. And the basis was that there would be an increase in, the days, what I would call the students who are commuting from home or living outside of the campus. And with that, the numbers grew. So the enrollment numbers, currently, the university enrollment usually has a minimum of 600,000 students. And beyond that, there's also the technical colleges. We call them TVETs, Technical and Vocational Training Centers. They would have the bulk of the students coming in at about 400,000. So effectively, in any academic year, you have new students basically joining tertiary institutions in excess of 1 million. And for that is where the opportunity really lies. When you look at the Kenyan market, most of the accommodation is actually in a very dilapidated state because the public institutions, once the policy change happened in 2003, most of them didn't really put much effort into improving the accommodation facilities. So you'd find that most students would be commuting from home or would even be staying in accommodation near the universities, what we'd call servant quarters. So typically, you'd find a house where a family is living and they have an extra room. So they would essentially sublet the room to the students. Now, with that, of course, there were a lot of frictions because ideally, that is not the right environment for students. Students typically want a space where they can read. And in the case where the host is having a party, for example, that would create a lot of tensions, especially during the exam period. So essentially, Acorn came into the market as a provider of purpose-built student accommodation. It was a new concept, and the focus was really around providing specific accommodation for students where they have their own space. Admission is really by virtue of having a student ID. So all the tenants are students, whether we have a range between 18 to 70. There are some students who are as old as 70 years old coming for PhD studies. So that is the range of the market. Now, in the Kenyan market currently, we are the leader in the Kenyan space with a portfolio in excess of 27 billion shillings, that is Kenya shillings. And we've now seen a number of other players coming in because as the first mover, we had the advantage of essentially developing the brand. We have a dual brand. One is a premium brand known as Kwetu with a Q. And then the mass market brand, which is a bit more affordable, is known as Kejani. And the idea was to essentially capture the two market segments. And we've had considerable success with a portfolio currently at about 20,000 beds, which actually is quite remarkable. And we still feel that there's quite a lot of opportunity. We would be looking to expand in the near future in the East African region. But for the time being, we want to consolidate our Kenyan stronghold. And we do believe that we have indeed embedded that in this market. Thanks.
Okay, thank you. Thank you so much, Solomon. And that was quite exhaustive. You mentioned, I think a lot of the things you mentioned, contributed to the success that we've seen Acorn have in the Kenyan market. Was just first off, the early market share you were able to gain just by being the first mover in that market, and also you've been able to leverage a lot of instruments to raise capital to build at scale. And I want you to double click on how much of an impact just that capital base, have had in how you build and how you operate and, scale student housing in the Kenyan market. And if you can also touch around paying capacity, it is something I really want us to address because we've seen a lot of investors looking to come into that space, but they are very wary about the paying capacity of students. I mean, Joanne mentioned the student loan thing that is going on in South Africa. It gives investors a lot of confidence in the ability of students to pay. Across the rest of the continent, we don't find that happening. So if you can touch on that capital base and how you've been able to leverage REIT as an instrument to raise capital for student housing and the impact all of that has had on the success that you've seen.
Okay. So I think fundamentally the PBSA market, especially in this part of Africa, is quite unique because your paying customer is the parent but the one actually experiencing the product is the student. And ultimately, you have to strike a balance between the two. In Kenya, we really value education. Education, as they say, is the key to success. So many parents are willing to actually invest in the welfare of their children. And one of the things I would say we have managed to achieve is to essentially sell peace of mind, because one of the key factors is ensuring that the students are in a conducive environment for their studies. In terms of capital, we have had some, I would say, some expensive lessons. We like to joke that we've paid school fees for the market because we started off, as I said, we were a project manager, and then we pivoted to become an integrated platform. And by that, I mean we manage the process end to end, from acquisition of the site to development and to operations. And we used to undertake the projects under an SPV structure with some, actually, the initial projects were undertaken using JV structures. However, the Kenyan market started evolving, and there was the introduction of the REIT regulations in 2013, which enabled developers to now take advantage of the tax benefits that the REIT sector in Kenya have. Just for context, the Kenyan market has two types of REITs, development REIT and income REIT. So essentially, development REIT would undertake the developments and then exit through a sale. And then the income REIT now would be the one that would operate the building to maximize the net operating income. So with that, Acorn took the strategic decision to set up the two REITs that was set up in 2021, February actually of 2021. And both REITs came into the market to raise capital. They were anchored by DFIs who are very, very much sold on the story and the impact of providing the student housing, because indeed there's a significant gap. So with that, we were able to raise equity, and that essentially served as the introduction of the REITs into the Kenyan market. And I should say that the REITs have been, I would say, are the most successful REITs in the country currently. In terms of debt, I think if I was to compare the two forms of capital, equity and debt, I would say that in my view, there is no challenge really in accessing capital. The challenge is in accessing patient capital. With the REITs structure, it provided a familiar structure that was enhanced by governance. We do have trustees within the Kenyan REIT regulation that are essentially an independent party that oversees the operations of the REITs on behalf of the investors, or unit holders, as we like to refer to them. So with that, there's an added level of assurance to the investors in terms of raising capital. Initially, when we started out, we issued a green bond, the first of its kind in East Africa. And it was actually cross-listed in the NSC, that is the Nairobi Securities Exchange, as well as the London Stock Exchange. And with that, we essentially, that essentially served as the introduction of Acorn to the global markets, and essentially built that confidence from investors. The green bond was anchored by another DFI known as Garantco that provided a 50% guarantee of the funds. So that gave a bit more assurance to the investors on the ability to raise the capital. And I'm glad to say that we managed to repay the bond last year in October, a month ahead of schedule, which just added a bit more confidence to the investors. We've also taken strategic decisions to remain active in the capital markets with other capital market issuances. And that has also enabled us to attract debt financing. We do have a panel of tier one commercial banks that are globally recognized that have also provided debt financing to sustain the REITs. to do.
Thank you. Thank you, Solomon. Thank you for sharing that. And I think, Johan, you can most likely relate to some of the stuff that he spoke about in terms of, getting capital from the market, and just the role of patient capital in helping you scale, because student housing is a segment of the market that requires a lot of long-term, I would say long-term perspective. And I would like you to just touch on, Johan, around some of the things you've seen from the South African market that has, especially for your business, has contributed to your success. And I'd like you to talk about it, from this perspective. I think today South Africa probably controls around almost 90% of the former PBSA supply on the continent. I'm saying purpose-built, managed, accommodation on the continent. And obviously, it's just drawing from just how mature the market is, beyond student housing, other asset class, just that maturity. If you look at REITs, it's the same. South Africa controls, that much of the market. If you look at institutional office development, or other asset class you can think of, it's a more mature market, a lot more capital base, and all of that. I would like you, Johan, to just touch on, from a financing standpoint, some of the things you feel, or you know has contributed to the success that South Africa has had, and specifically Eris. And also some of this, I know you've mentioned a few of them, like the student loan thing going on, and how that is, increasing the ability of students to pay, and what are those lessons that you've learned that can be transferred to more developing markets, like Nigeria, like Ghana, like other regions.
Good. Thanks, Martin. And I think it's a similar trend to what Solomon was saying. I think they're much further advanced with those student accommodation specific markets. The trend that I like to see, and that we are seeing, is that there's different capital for that first section, or the development phase, or the initial setting up phase and building track record phase. And there's a different type of investor and longer term viewer for the second portion. When your cash flows have been stabilized, you've got a bit of a track record, you can show that the development has been completed. I think it's a bit of a risk in Africa, or perceived risk from investors in Africa, that there's a much larger risk on developments than there is on assets that have been completed. And we need to try and mitigate those risks for the investors. So as Solomon also mentioned, DFIs have really bought into the impact side, or the ESG side, of what student accommodation is doing across the world, and especially in Africa, and how that can move the needle. So we've got a few DFI investors, we've got some local pension fund investors that are also looking at it at a longer term. How we've mitigated that development risk, we've got one structure. We don't have the two different development and investment structures. Is that Eris Property Group actually underwrites the cost of the development. So as the development manager, they earn a fee, but for that fee, they underwrite the capital that will be deployed. I think we're quite lucky in South Africa that our construction development market is well regulated. It's competitive, so you've got a bit of a lower risk to do that. But it also gives the satisfaction to the investor that you're aligned with them as a developer, to make sure that this development is built cost effectively, with no overruns, and also no time overruns, because in South African market especially, you've got one intake per year. In other markets across Africa, you might have two intakes, but if you miss that intake by a month or two, your building is probably going to be vacant for the rest of the year. So it's imperative that we in the South African market hit that end of the calendar year date, with our intake being January, February for the year. Yeah, so I think that's how we've been able to deal with it in South Africa. The fact that NASFAS is there and gives us a bit of almost a government-backed rental. We allocate a portion of our developments to targeting NASFAS students. That also helps to get the developments off the ground quicker and the backing from the investors.
Yeah, what lesson have you learned from this government program that you think can be transferred to other markets within Africa? Because I mean, we talk to a lot of investors. Their biggest concern, obviously, is the paying capacity of students. Like Solomon mentioned, you are playing in a field where your real paying customer is the parents, and then the actual experienced customer is the student. And when you live in a low credit environment, especially for some markets like Nigeria and Ghana, it's difficult to convince investors that these students can actually pay, right? Or their parents can actually pay. So, and I mean, having just a loan program running in South Africa, I believe, has contributed significantly to absorption rate and just your ability to convince investors. I think for me, it's just the ability to convince investors that this segment of the market can pay. Just share around how it would be good if you can just double click around how that has helped the maturity of the market, convince the ability to convince investors, and just how the market has grown, from your experience. What are also the lessons that other big markets can take from it?
I think the big lesson is that there's not one solution that's going to get student accommodation to move forward. It's going to be taking hands with a lot of different structures, entities, governments, investors, developers, entrepreneurs that is going to come to an innovative solution that can be rolled out. What we've learned in South Africa, that as good as NASFAS can be, it can also be detrimental. So if there's corruption, if it's not being managed properly, it's seen more as a risk from investors than actually an income. What we have found that helps convince investors as well, in a new market, there's a lot of education that needs to happen, not just with investors, but with the students as well. They need to understand what purpose-built student accommodation actually delivers and what that extra value is over and above the back room that Solomon was explaining earlier, and that the payment, the rental that you're asking actually justifies it. And doesn't push it over the edge for affordability, because there's a lot of other services that they would be paying for elsewhere that they're actually getting in the student accommodation. But what's happened is that a lot of banks, investors see students as, oh, this is a 6-month lease or a 10-month lease. There's no credit behind it. How do you guarantee that we'll get the rentals, and these guys move out after 10 months, you have to release the whole building where there's no head leases in place, and that sort of thing. But the trends worldwide and South Africa that we've also seen is that if that student has moved in with you in year one, we've got a 60% retention rate that carries on. So you actually you've signed a 3-year lease with a student. It's not a 10-month lease, and the investors and banks need to understand that it's a longer term commitment to you, although the paper says it's a 9 or 10-month or 6-month lease.
Yeah, I agree with you, and I agree with you, and I think it's a key factor in convincing investors. And I'll just draw from even other markets that we do research in. The office sector, for example. You want to do an office project, you have an anchor occupier that is a multinational. The bank, if even if it's a 1-year contract you have with them, it's enough conviction, for the bank to back that project. The same with retail. I remember when ShopRite moved into Nigeria, you have an anchor retail like Jobrite, the impact it can have in, in convincing investors that, oh, this is what my wow. And so I'll just check in with you, Solomon, real quick. I think that I don't think we have a lot of that happening outside of South Africa, where you have government-backed student loan programs that are actively, that are working actively. And I'd like to hear your thoughts around how you have been able to keep occupancy and keep occupancy at good levels, and being able to convince external investors that the opportunity in that market is what their capital, from your perspective. If you can share that would be very helpful.
Yeah, I think one of the keys to the success of Acorn in this space has been really creating the community aspect, because one of the fears when we started this venture was from the banks themselves. They thought that the students would be rowdy, they would damage property, that they would they would not maintain the facilities in a clean fashion. But one of the things we've observed is the students are actually very, very, very responsible, especially when they have that community feel. And because, for them, these are people who have just finished their secondary education and they're now starting out as adults. So they would really take a lot of pride in their space and having a space that they can call their own. So we find that that has been one of the interesting things that we've observed, and we've actually communicated the same to our lenders over time, and they've actually started to appreciate that, because PBSA as a segment has a tenant who, as Johanna said, would be with you for at least 3 to 4 years. And that level of stickiness is actually quite something that is bankable. In terms of government projects, I think the South African experience is a bit unique, because the student loans there have been essentially successful, largely. I think in the Kenyan space, we have the Higher Education and Loans Board that provides student loans. However, they, given the management of the institution, they tend to focus on paying the tuition. So they tend to cover the tuition, which doesn't leave room for accommodation. So some of the things or the initiatives we've undertaken is actually working with certain benevolent institutions such as the Mastercard Foundation, where we've even essentially had a partnership where we've subsidized the accommodation cost for the students to enable them also cater for more students with their tuition. And we do believe that that has been a success factor, because it enables that occupancy to be sustained, and that enables also the students to have that peace of mind while they are studying and staying with us. We've also partnered with the universities just to essentially act as our endorser, because the universities themselves, as I mentioned, their key job is to educate. So they do, with the partnerships we've developed with the universities, they're able to recommend us as one of their accommodation providers, and that also helps to just boost that occupancy and just the overall success of the PBSA segment.
Okay, thank you very much. And I have a follow-up question around that.
Yeah.
It's just around how you've been able to build very reasonably priced products in premium environments where cost of construction is very high, cost of acquiring land is very high, and also just how you've been able to manage the operational heaviness of PBSA. It's a lot of managing internet, managing daily cleaning, managing a lot of things, honestly. And what we've seen across the market, developers typically build, uproot, and offload the asset to another manager. But you are, operating a fully integrated product. You not just only you raise capital, you build, you operate in expensive environments where you are still required to build something that is reasonably priced for the student. And Solomon, you were already speaking. If you can just touch on that, that would be very, very, very helpful.
Yeah. Well, we've had some lessons, and one of the key lessons is the value of research. Our developments are fundamentally informed by market research, which was undertaken much earlier in 2017, and we're able to identify certain strategies that would enable us to essentially price the product at the right point. One of the other factors is really the densification, because for this kind of undertaking to make sense at an institutional scale, you need to build a structure that would be able to sustain more, so that the revenue outweighs the overall cost of the operations of the property. We do have in place a team that normally undertakes detailed design prior to the construction of any property, because when we start off the project, we build with the end in mind, and typically there have been some lessons that I would say would be very interesting. Just to give an example, normally for the girl child, they tend to be the most picky customer, because for them there are certain things that they can pick out that the boy child doesn't. Because, as guys, we can stay anywhere. But for the girl child, they pick out certain details, such as even the level of lighting in a building. So if you're able to pick that out from the design point of view, you'd be able to save a lot more, because you'd have that stickiness in terms of the occupancy. So it's really a matter of the detailed design at the onset, and also market research. With the scale we've now built, we've been able to take advantage of economies of scale. So, for example, for the Wi-Fi, we procure in bulk, and that enables us to get better pricing on a project level, because you'd have a bulk discount even on the service, because it gives you a better bargaining position. So there are certain lessons we've built over time that have actually helped us thrive. Yeah.
Thank you, Solomon. And I think I can relate. I think I was reading a research that said that women have the best eye. They can catch things way more than men, whether it's color, whether it's lightning, the tiniest of details. So
Yeah.
they are your best. I would say they are your best product testers.
Exactly.
It gets with them, it gets with everybody. Okay, thank you, Solomon. That was very helpful. So Johan, I would like you to share a bit more thoughts around just the overall market, perception of PBSA as an asset class. We talk to a lot of institutional investors. We talk to a lot of capital allocators. We talk to a lot of DFIs who are looking to deploy capital. And when the conversation around PBSA come up, to them is always the same thing. It's too risky. We doubt that students can pay. It's a lot of risk with managing the assets, running on a day-to-day. And I mean, that can be justified, because if you go to tertiary institutions, like Solomon mentioned, a lot of the hostels you will find are in very dilapidated conditions. So there's this general notion that students are just generally poor with maintenance. They will destroy the asset, I will lose my money, and all of that. That's a big misconception, even though there is a bit of truth to it, but that doesn't represent the market. I would like you to touch around, if you have DFIs in this room, talking to us, if you have institutional investors who are listening to these videos, what would you say around the opportunity in the market and some of these misconceptions?
Okay, no, thanks. I think Solomon also touched on some of these things, and it's a perception of risk in different forms. A risk of the students not behaving themselves. Solomon touched on it. The students, there might be one or two bad apples in a bunch, but what we found is, with management being there, that broken window concept that they did in New York a few years ago, or actually quite a long time ago, is as soon as something's broken, fix it. And if somebody broke it on purpose, take them to task for it. The students in that community appreciate it. They appreciate it. 98% of them don't want to live in an area or in a student accommodation that there's 1% that is not behaving themselves and have got free rein to do whatever they want. So the management of the students, the management of the property, keeping those students in line and showing the students that we as management are proud of the product. They can also be proud of the product. What we must remember is that they're also still young people. There's a few things that they still need to learn. We've got a student life program that we also run, which is also very important. Solomon touched on that. That you create that sense of community through your student life program, where the students eventually start sorting themselves out. They reprimand each other where you're not behaving yourself in a way that you should be. That community sense is created. So the risk of the students destroying a building is very low. We actually stopped charging deposits on most of our assets after the second year because it was a barrier to entry for some of the students to gather that amount of money as a deposit. We then saw that the risk was so small. I think in our first year in that one building, we put a bit of a fund, a slush fund or together to pay for all the damage that we're going to have at the end of the year because we haven't collected deposits from the students. We paid 36,000 Rand in damages that year, which is in the bigger scheme of thing in a building of 980 students, it really isn't that great. So the first thing is that perception that students just are there to destroy and abuse is a misconception. We've experienced it, but having said that, if your property is not well managed, if you don't keep an eye on it, if you don't maintain it, it will deteriorate. Any building that is not maintained after 20, 30 years is going to look dilapidated, and not necessarily because the students abuse it, just because there hasn't been any maintenance and upgrades and things done to the building. So I think that's the first misconception. The second one is whether the parents can pay or not. And I think that's a bit of a bigger struggle in Africa to cross. The parents, Solomon mentioned, in Kenya are very proud of being able to send their students to get tertiary education. It's almost like a must. And there's a few other areas where it is the same. The parents would rather go hungry for a day or two and pay their students tuition than actually they sacrifice a lot of other things to get their student that step up in tertiary education. It's not what you want to hear, but it does happen. That is how important it is for a lot of families across the African continent. We need to try and prevent that from happening by joining hands with government institutions, getting them to reduce taxes, for example, or VAT on student accommodation, or subsidize it somewhere in the rates and taxes and utilities if you're developing student accommodation. But that perception is definitely a false one. There is returns in this market for the right product. You can't put any product in any market. Solomon mentioned that you have to do research. We do micro research around every campus that we go into. You'll see that not one of our products is the same because the research shows what the students in that campus can afford, what they're looking for, what they prioritize. Do they prioritize a single room over having ovens in the building? Are they willing to share kitchens but have their own bathrooms? So we go through a lot of research to determine what the students would prefer and what they are willing to pay for, and at the same time educating them on what is available in the market and how things work. Students often see a rental and say, well, I can't afford that, until you tell them, well, where are you staying currently? How much are you paying in transport? How much are you paying in utilities? How much are you paying on your cell phone for for internet, all of that is included in your student accommodation. So there's a bit of a education process that needs to happen. The designing and managing and investment and fund managing, we do similarly. Solomon mentioned it, it's all in-house. You have to design for the future. If your developer is different to your property manager, quite often the developer will skimp on costs, but that's going to cost you a lot of extra operating cost later on. So those developments have to be developed for the future. Rather spend a bit more on one of the stupid examples is hot water storage and the way that that's managed, so that you can heat your hot water with solar during the day or in off-peak periods, and the students can use it on peak periods, and you're not paying a lot for that. But if you're a developer split from your property manager, you put the minimum size hot water there, and leave that as a problem for the property manager and the operating costs at a later stage.
Okay, thank you very much. Because of our time, we'll be wrapping up. Before I go into the final round of questions, I would like you, Johan, because you are speaking and you'll be able to share on this as well. We have a few questions from LinkedIn, I think. We have a few questions from LinkedIn and Instagram. So from LinkedIn, and I just got a text as well. Somebody is asking a question around, he said one of the biggest gaps he has seen in operating PBSAs is the long-term operational headache that comes with it. That would be interesting to hear how, you have been able to manage operational risk long-term, drawing from South Africa and Nigeria. I think we've mentioned a bit of this here and there, but Johan, if you can just wrap it up, that would be very helpful. And Solomon, if you have something to touch on that, that would be very helpful. I think the day-to-day management of this piece can, contribute to as much as 40% of your cost overall. I believe, just drawing from experience from, what we've seen, how have you been able to manage that risk, especially in volatile environments where things are shifting? South Africa is a lot more stable. Nairobi is a lot more stable, but even for other markets that are a lot more volatile, how have you been able to manage that operational burden long term? So, John, we can start from you.
Okay. I can probably talk a whole hour on that because that is what we've been focusing a lot on. But I'll mention one or two examples quickly. Building a building that doesn't need a lot of maintenance, face brick on the external facade, internally having tiles or laminated flooring if you're lucky enough to be able to do that, having walls that are not really plastered and painted, that need to be painted every 3 or 5 years. There's a lot of things like that can be done from the design phase to prevent that extra cost. Designing it so that you've only got one entrance. You've only got one entrance to manage. You've got limited access control points in your building. You've got limited security that you need in your building because you've got one access point in your security perimeter is either controlled by cameras, fences. Use the building line as a wall, so that it doesn't need an extra wall around it. Have the students assist with cleaning, maybe allocate a bathroom to certain students and make it their responsibility during the week to keep it clean, and you clean it once a week, so that there's a shared responsibility and a reduction in costs. On the electricity utility usage, that's probably one of our largest costs in student accommodation. And we've seen that you can't put too many meters in a building. You meter everything, you monitor everything, it's live. It gives us alerts when there's leaks detected. If units are abusing the system, we know what an average unit should be using. If in a day they're using More than that, there's an alert that comes in and says, go and check this unit. There might be a toilet that's running, or a leak, or somebody showering for an hour instead of the limited time. There are student accommodations with shower timers in them. There's a whole lot of ways that you can mitigate that by designing and developing it properly from day one. But keeping your finger on the pulse, making sure that every cent is managed, because it goes straight down to your bottom line. Any extra cost, we've got an all-inclusive rental. Any extra cost goes off your bottom line. So you, as the manager, investor, needs to manage that very, very carefully.
Yeah, thank you so much. Thank you so much, Johan. Because of our time, we're running pretty late. Solomon, I would have loved to take your time, your thoughts, but we don't have a lot of time again. I just want you to share final thoughts, both of you, on what you think scaling PBSA in Africa would look like. There are projections that by 2040, Africa's student population will more than triple. And obviously that is drawing from the overall population growth that we are going to expect over the next 2 to 3 decades across the continent. If we have triple the population size, by 2050, and there are not a lot of scale like you would expect in purpose-built student accommodation, it's going to complicate the problem more. I'm going to just go and allow both of you just share a bit of thoughts around what you think scale should look like. What frameworks have you, do you think from your experience would work? What does capital structure look like? What should the policy environment look like to enable a very scalable PBSA market in Africa, from capital to regulatory environment to just how these assets are being conceived, and developed? If you can share a bit of final thoughts around that, that would be very helpful. So because you shared last, Johan, I would like to just start with you.
Okay, thanks. I don't know where to start, because we're looking at 10 years, or how we're going to get to 10 years. But what needs to happen is definitely innovative ideas with a whole lot of partners in this industry, if we are going to get there at all. We need, I mentioned, the local governments to assist in not subsidizing, but giving tax breaks or VAT rates or rates and taxes or utilities to reduce those costs. We need local pension funds to commit and support this. We can't just look at DFIs and external investors to come and rescue us. We need our local pension funds that have got local currency investments to assist us, that there's no exchange rate risks in that, to push this forward. We need innovative ideas on the structuring and how the funds are going to be deployed over a period of time. We need the universities to come to the party to give maybe a guarantee or a head lease or something in place there to mitigate that risk, especially initially. It doesn't have to be for a 40 or 50 years. It can maybe be 2 or 3 years, just to help settle the cash flow for investors and show them that this thing can work, and give them confidence that over a longer period of time that can work. There's a lot of things that need to happen, and people that need to work together to get to a point where we can build. I keep telling my team, if we can crack this nut with the right people in the right places, we'll build 1 million beds in Africa. There's a big demand. There's a big opportunity. We're passionate about it, and we've got the right government, political, TFI, investment buy-in. It can really be a massive industry. I think to get there, there'll probably be a few smaller players that will be building single assets. Those will be consolidated over time into bigger portfolios with proper assets will then start to be listed and the future from there, recognizing student accommodation as an asset class on its own is just going to grow. We've seen that trend in the US and European markets, and I hope and trust that we'll be following that over the next few years.
Yes, Sugar now. Yeah, I agree a lot with what Johanna said. Just to add, it's actually something to do with the capital and the scale at which this market segment is poised to grow with. There's one thing that our CEO Edward Kraven likes to talk about, which is the power of retail investors. We have an opportunity in this continent to take advantage of the huge demographic dividend, where the retail investors would essentially take up space in investing in PBSA. In Kenya, we've already done it with a product called VUCA, but its uptake has been slow because, as you can imagine, it's a bit more sophisticated as an investment product. But the opportunity for growth for retail investors in growing this market segment is huge. Already, predominantly in Kenya, the investors currently taking advantage of the returns from PBSA are the institutional investors. We've seen a lot more pension funds allocate capital, but there's still a limitation. There's a regulatory limit of up to 5% based on the Kenyan retirement benefits regulations, which kind of limits the capacity to invest. But we're seeing a lot more lobbying and investor participation in trying to get that limit built, basically increased, so that the institutional investors can now come in and then thereafter make room for the retail investors. I'm a fan of Aliko Dangote, and very recently he's spoken about PBSA in Nigeria, which I find very interesting because when you see someone like Dangote considering PBSA, it kind of gives that confidence that we are essentially on the right track. And it's basically going to benefit a lot more from the retail investors in the long run. I think that's it for now. Thank you.
Okay, thank you very much, both of you, for joining us. And I'll just do a quick recap for those of us who joined me this conversation. Thank you so much as well for everybody joining us from LinkedIn. This conversation has just been around how we can close the capital gap in purpose-built student accommodation, and just some of the misconceptions that investors are have in mind around the market. The opportunity is absolutely here, but it's not like other asset class. It requires a lot more research. It requires a lot more intentionality in how you structure PBSA as an asset class, how you run it, how you manage it, how you think about partnerships, whether it's partnerships with capital allocators, partnership with the tertiary institutions themselves, partnership with even the government to make the environment a lot more friendly for operators and even the students. And it's just a lot more, I would say, nuanced than you'll find in other asset class. But the truth or the facts from what we are seeing in the market is the opportunity is here. And by 2050, Africa's population will more than double, and students housing and generally student population will more than triple. And so if that is the case, we definitely need a lot more operators in this segment of the market. We definitely need a lot more intentionality in how PBSAs are conceived and built. And today's conversation, I would like to thank you so much, guys, for joining. Joanne, thank you so much. I know you will need to run, and a lot of us have other stuff we need to get to. And Solomon, also, thank you so much for joining us. For us as a business, our focus has been, in around steering conversations like this, providing investors with, the data that they need to make informed decisions, whether they are building PBSA or conceiving a data center project, whatever it is, we provide them intelligence on the market. And a lot of also the work that we do is steering these kind of conversations. so the investors can hear directly from operators and people who are on the ground to get context on what is going on in the market. I hope we'll continue this conversation sometime soon to sort of unpack a lot of the things that we touched on at surface level. But again, thank you both of you for joining us, and I hope you have a good rest of the day.
Thank you.
Thank you. Thanks for the opportunity.
Yeah.
Bye.
Yeah, bye everybody.